Hi guys. Today we will analyze Wyndham Hotels & Resorts stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Strong support levels are around $64 and $54. Next strong support levels are around $45 and $40. Strong resistance levels are around $72 and $80. Next strong resistance level is around $90. In the last month the stock has been trading between $63 and $72.50 range. It is currently trading near the lows of this range. The stock has an average volume of 0.8 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since April 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 7% per year, for last 5 years. We see that the average profit margin of the stock has been around 10% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 73% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Wyndham Company: bad, average, and good. First scenario. Wyndham will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 1%. Future profit margin would be a low, 16%. Future free cash flow to net income rate would be a low, 50%. In this case, the fair value of the stock today would be $20. Second scenario. Wyndham will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 18%. Future free cash flow to net income rate would be average, 65%. In this case, the fair value of the stock today would be $30. Third scenario. Wyndham will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 3%. Future profit margin would be high, 20%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $41. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.75. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Wyndham, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 18. Again, I will use 3 different scenarios for Wyndham Company: bad, average, and good. First scenario. Wyndham will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 1%. Future P/E would be a low, 14. In this case, the fair value of the stock today would be $24. Second scenario. Wyndham will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future PE would be average, 16. In this case, the fair value of the stock today would be $30. Third scenario. Wyndham will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 3%. Future PE would be high, 18. In this case, the fair value of the stock today would be $37. As you can see, today the stock is overvalued, $65, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 2 to 3% yearly. Based on that, the stock looks overpriced at the moment. The stock has been in a downward trend since April 2022, and it can go lower before it recovers. I may consider buying the stock if the stock drops below $40. Company's strengths. Wyndham Hotels & Resorts is an American hotel company. It describes itself as the largest hotel franchisor in the world, with 9,280 locations. It has a portfolio of 20 hotel brands, including Baymont, Days Inn, Howard Johnson, La Quinta, Ramada, Super 8, Travelodge and Wyndham. Wyndham has seen significant recovery in revenue per available room, and hotel booking demand in the U.S. Wyndham's economy mid-scale select service presence operates at low operating costs, allowing its U.S. hotels to break even at 30% occupancy levels. Wyndham launched a new extended stay economy scale segment concept in the spring of 2022. The company has fourth largest loyalty program by membership, 95 million as of June 2022, which encourages third-party hotel owners to join the platform. With 99% its hotels franchised, Wyndham has an attractive recurring fee business model with healthy returns on invested capital. This asset-light model creates switching costs, given 10 to 20-year contracts that have meaningful cancellation costs for owners. Wyndham disclosed plans to open 20 new Microtel by Wyndham hotels in China by the end of 2022. The La Quinta brand offers long-term growth opportunity to 2,000 units from 922. The company's return on assets of 8%, return on equity of 32% and profit margin of 22% are amongst the best returns of the industry. Risks. Cyclicality, illness like COVID-19, and overbuilding, are the main risks for shareholders. Typically, U.S. lodging recoveries last 5 to 9 years, but the recent upcycle that ended in early 2020 lasted 10 years. Recent geopolitical events could dampen the recovery in travel demand this year. While the stock could have longer-term upside, recent market volatility could mean downside in the short term. Home and vacation rentals present an increasing competitive threat, and the advancement of technology and its use by next-generation travelers increase the access and awareness of these properties. Wyndham's U.S. hotels represent 61% of total rooms, exposing the company to an economic downturn in the U.S. The last recession led to revenue declining 12.4% in 2009. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 2 to 3% on average per year. The earnings per share is expected to grow by 6 to 8% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.